All right, so on Friday we've got some follow through the upside. There was some concern that maybe the plunge protection team might step in and try and stop this decline at the 200-day moving average. If they were trying, they were not successful on Friday because the market sold off again, and this is fairly bearish that the S&P has lost that 200-day moving average. So I'm going to look at a couple things here, and we can try and determine whether or not this is going to turn into some kind of a crash event, and we get our ICL during this second daily cycle low, or whether or not we're still going to have a third daily cycle after this before we get our bottom. I'm leaning a little more towards we're still going to need a third daily cycle, but I'll show you what I'm kind of looking for here. And if this does play out, then I would say that we would be getting our intermediate cycle low now. So here's our major support zone here around, let's just call it 2960-ish, the top of this daily cycle here, and the bottom of the half cycle low. And I've gone over this before, bloodbath phases tend to start when an important support zone breaks. Then everybody panics, and you get about 5 to 7 days of just panic selling, and the bottom drops out, and then at some point that selling panic exhausts itself, and then you get your ICL bottom. So this is a potential target right here. If the S&P breaks below that next week, and it seems likely to me that it will. We're only 30 days into this daily cycle, and most of the time they'll last 35 to 45 days. And considering, even if we are expecting this to be a short, only 2 daily cycle embedded within this intermediate cycle, then I could see this cycle running a little bit long. So 40 to 45 days, I think, is doable during this cycle. So there's definitely time for this to develop and maybe become an ICL. So this is the first thing I'm going to watch, is this support zone here. And if this breaks, and especially if it breaks Monday morning and breaks violently, then we want to be cautious. We don't want to buy too early, just on the possibility, the chance that a break of this could unleash a bloodbath phase, and then you could have like a second bloodbath phase that might be even more intense if this daily cycle low were to break. And again, let me point out again that this, as it stands right now, this daily cycle is left translating. This top came on day 17. For a right translated cycle, you would want this top to be day 21 or 2 or later. So potentially left translated. Looks like the odds are very good that it's going to be left translated. Most left translated cycles will drop below the daily cycle low or the previous daily cycle low of the same degree, which would be this right here. So we just have to be careful here. Breaking this, especially breaking it Monday morning, breaking it violently, is likely to start a selling panic. And I would say for sure, if we break this daily cycle low, there really isn't much support until you get down to the March low. If this breaks, that could seriously unleash a major bloodbath phase that could progress over, let's call it, the next 2 weeks. And if that happens, then I'm going to say yes, we're getting our intermediate cycle low during the second daily cycle, and we're not going to need a third daily cycle in order to complete the ICL. Another thing we're going to watch is the RSI here, and again, it looks to me like we've just got more to go. Probably going to break this. Considering this is left translated, this should break. If those two scenarios play out, then the RSI is going to get presumably, unless there's a lot of bounces in between, a lot of up days in between here, but if we start to get some serious follow-through selling, then RSI is going to push down here and get heavily oversold, and that is one of the characteristics of the declining phase of an intermediate cycle. Um, I don't have the updated figures for the McClellan oscillator just yet, but um, I do have a way to roughly calculate it, and at the close today it was at about minus 70, so we're getting pretty oversold, and that would be something else I want to look at. If we just, as I said, if we just continue to sell off here early next week and we push that McClellan oscillator into a deeply oversold position, something minus 100 or lower, especially if it was to drop down to maybe minus 120 or lower, that would be a strong indication that this is a much larger degree correction than just a daily cycle low. And then at that point, we would probably expect, once we hit minus 100 to minus 120, you would expect, 1 or 2 up days, and for the selling pressure to ease on the McClellan oscillator, and then another push lower where the McClellan oscillator would diverge a little bit. So another component that's going to tell us whether or not we are starting an intermediate cycle low here. Again, I guess I'm leaning I'm leaning maybe 55% into the camp that we're going to need a third daily cycle. The reason being is I think the plunge protection team is probably going to pull out all the stops Monday to try and stop this selling pressure. And if they do, they may slow this down, and we may just end up getting a daily cycle low somewhere between 2960 and 2770, somewhere in this zone right in here. So I'm tentatively thinking that we're going to need a third daily cycle before we finish, but I may be wrong, and we may just get a severe waterfall decline that takes us back somewhere between 26 and 2400. Again, I don't really think this is going to break during this next ICL. My expectation is an ICL would just probably come down to 26 or 2400. All right, next thing we want to look at. The weekly charts. This is the 200-week moving average. If over the next 1 or 2 weeks, price comes down to re-tag this 200-week moving average, then absolutely yes, we're going to be, this is going to qualify as an intermediate cycle low, not just a daily cycle low. Also, if the decline is strong enough over the next 1 or 2 weeks to push the weekly RSI to oversold, again, that would signal that this is a larger degree ICL that is forming. And then the last thing we're going to watch is the 10-week moving average next week. Intermediate degree declines will usually drop far enough or long enough below the 10-week moving average to at least marginally turn that 10-week moving average back down. And we can safely assume that if price comes back down to this 26 or 2400 level in the next couple of weeks, that is going to be enough to turn this down and and confirm that this is an intermediate decline. And so at that point, we want to be we'll be watching the sentiment indicators, and then that would be the point at which we would want to go back into the stock market, probably heavily, maybe with some leverage, as the central banks are going to panic and start printing, even more radically than they are already. All right, moving on to gold. Friday's reversal looks fairly positive, but I'm not going to get ahead of myself just yet. We still haven't gotten through 1800, and we all know that there's probably going to be another attack on gold Monday morning. That's when the banks love to hit this. So, until we get through that, I'm just not prepared to give my blessing for anything other than, if you want to hold unleveraged positions with a stop below 1750, then I'm fine with that. Um, but I am not prepared to tell people to go into heavy leverage right here, expecting a breakout. Um, there's just still too much risk that the banks, are just not done with gold yet. And they may come in and hit gold hard on Monday morning and drive it back down and try again to push gold below 1750. So we aren't out of the woods by any means. Um, and the fact that silver and miners both are still diverging from gold. You can see that gold has made a higher high and silver has not, and neither have the mining ETFs. GDX also has not made a higher high, and I've seen intermediate cycles that have topped this way with divergences in the miners and silver. So this is still a cautionary flag for me at this point. This needs to get corrected. Um, so I'm not, again, I'm just not prepared to give the all clear here yet. Not until gold gets above 1800 and I at least see some kind of a strong move that would indicate to me that the miners are ready to play catch up and ready to make a higher high, and silver as well, and join gold in getting rid of these divergences that are, in my mind anyway, that are still a bit concerning. So at this point, if I can see gold close above 1800 and close above 1800 and not reverse the very next day, then at that point I would be more comfortable in taking a position with the expectation that gold is going to rally up to 1900, and then we could catch that 100-point move or 90 points or whatever there's left at that point. I don't think you have to panic that you're missing the move if we wait for gold to get above 1800. You should still have probably 90 to 100 points still to go before the intermediate cycle would top. So we can catch a nice move, and then at that point our stop would be pretty clear. We would just put a stop at well, let's just say 1790, and that way if gold were to just get above 1800 and then immediately reverse back down below it, that would be a warning sign that the banks have manufactured a bull trap to unload their shares on gold bulls and then turn the metals back down. So our stop would be fairly close at that point, I think. I'm just going to stay a little cautious. We knew this was going to happen. The plan was always, take profits at that test of 1800, see where it goes on the correction, and then wait to see if we can get a breakout on the next attempt. And hopefully we're setting up for that next run at 1800 on Monday. If, on the other hand, all of this is reversed by Monday morning, or if gold is back below the 10-day moving average, then at that point I would just say anybody that's still holding metal positions, you probably ought to just go ahead and exit. And then a final word on oil. People have been, in a big hurry to jump on the energy market for weeks and weeks now. But I'm, with the threat of an ICL coming in the stock market, I think that's probably going to take oil down with it too at some point. So I'm really just not going to be interested in oil until these weekly oscillators at least get back to oversold. So, preferably the weekly stochastics, but bare minimum, I'm probably going to want to see the 5-week RSI get back down here to at least marginally oversold before I'm going to be ready to pile into the energy sector, and I would probably want to see this 10-week moving average turn back down as well. So something that I could identify maybe as some kind of an intermediate cycle low before I'm ready to play the energy market.